Looking at the GDP number that we saw for the third quarter of last year, we saw the Ghanaian economy contracting by 0.2%. This is quite important. It's ahead of elections. With regards to some of the changes we could see on an economic perspective, how important is the political scenario right now?
Well, first of all, that 0.2 contraction is off a 13.6 annual growth rate for the year. So
off a very high base.
Let's put it in perspective. Political risk when investing in Africa is at the foremost of investors' minds. And Ghana is no different. It's a hot topic on everyone's lips, despite the fact that the economy is growing at 13.6% for 2011. When looking at the election in Ghana, I think when I was in the country last week, I tried to get a handle on some of the key concerns for investors, and amongst those were obviously the political outcome, the oil story, the debt management, and importantly the currency situation, which a lot of the people we spoke with cited as one of their key concerns.
Ronak, do you think that there's going to be any significant policy change going forward? I mean, depending on obviously who wins the elections, but it is really important that investors actually have peace of mind.
Well, so when assessing an election outcome, investors will look for three key factors. One is who's going to win the election, and in Ghana it's very, very close, so you can't really predict at this stage. Secondly, the likelihood of violence, and I think since '92, Ghana's had 5 successful elections with peaceful handovers of power without any violence. And 3, policy implications. And because it's such a dialectical political system where it's so heavily reliant on consensus building and consensus politics, I think that makes it difficult for any radical policy change. Also, when you look at the economic figures and what the country stands to lose from the oil story, it really makes it difficult for radical shifts in policy.
Well, with regards to the oil story, I mean, we also know that China is becoming a major destination for Ghanaian exports as well. This is very important with regards to Ghana's growth. It seems that there is a lot of demand for a lot of the goods that are coming out of Ghana. Manufacturing sector doesn't look that fantastic. A very big focus coming through on the oil front.
That's quite correct. So oil is a big story, but really what investors should be looking at is the gas story. As we heard last week when we were in Accra, it's oil for sure and gas for go. Gas is really what's going to get the economy to take off because you can develop industries around plastics, fertilizers, glass, basically the ancillary industries. And in that sense, I think developing the ports, the railways, the infrastructure around that will really provide the scope for inclusive growth and make the headline figures filter through to the population at large. On that gas story, what we saw was the fact that the Chinese $3 billion loan was primarily, the lion's share of that was allocated towards gas infrastructure development. And it seems like policymakers are aware of the benefits that can accrue from it.
Well, I mean, speaking of loans, looking at the debt management coming through for Ghana, of course it is a very fine balance. Do you think they're going to get it right going forward?
Well, if you bear in mind the context of where the NDC came from when it took over power in the end of 2008, the NPP government had huge fiscal overruns. They inherited a deficit of about in excess of 15%. So the progress under the IMF ECF facility has been good. When we met with the IMF last week, they indicated to us that Ghana's targets had been met in both September and December for the debt management criteria. In addition to that, the government now provides quarterly reports on its arrears situation, which was a key concern before. And also we saw an increase in the amount that Ghana was allowed to borrow from 800 million in terms of non-concessional borrowing to 3.4 billion, which is what allowed the Chinese Development Bank gas loan of 3 billion to go through. So a lot
more confidence through
yeah, so I think there is progress in that regard, but what's key to watch in an election year is fiscal slippage, because historically that has been a risk. An area where that has been a weakness.
Absolutely. Ronak, also just looking at the balance of payments, because between 96 and 2008, we actually saw quite a few surpluses coming through for Ghana, and then that now slipping into deficit. Do you think that we could actually start to see this being reversed, given the fact that there is just so much infrastructure spend, particularly as you mentioned within the gas space, and overall the economy looking quite strong?
I think the balance of payment position will improve over the medium term, especially as oil revenues start to come online. In that sense, I think it will be a gradual appreciation. As you know, Ghana will start exporting more with the developments in the oil sector, cash in on those revenues, and we should see the currency as well start to appreciate over the medium term.
So, and I mentioned the manufacturing sector. Some have said that it's basically failing, that it's not growing fast enough. We actually saw it growing by around 1.7% compared to the actual target of around 7% for last year. Is this a concern for you? Do you think that they should be focusing on ensuring that they do diversify their economy and not just solely focus on the oil and gas sector?
That's definitely a key concern, but progress in that regard in terms of the oil and gas sector has been positive. They're taking it slow. The progress has been in line with best practices in Norway, Trinidad and Tobago, and there is a high degree of civic engagement and public accountability in the process. I think, as I said, the manufacturing sector, the services sector, all will be developed, but being an election year, I think progress will be slow on the reform front. We could see a spike in spending, and that's something that we need to watch. That said, the prospects at RMB for the Ghanaian economy are still bright, with growth rates forecast at around 7%.
7% for this year, so lower than the 13.6% that we're talking of. The cedi has been weakening. Is this a trend that is likely to continue?
Okay, so we saw in the second half of last year that the cedi depreciated by approximately 10%, and in recent weeks we've seen a bit of a clawback after the Bank of Ghana intervened. I think that the clawback will persist for a while, and there'll be a bit of stability, but in the lead up to elections, I think we're likely to see a bit of a depreciation again. The import bill rose 45% in the first half of last year, so that's one of the factors driving it. General risk sentiment from the European story, election wait and see, that cautious approach, as we saw in Nigeria last year, is also going to be a factor. And I also think that portfolio flows into the country are likely to be subdued. So I think we could see a bit of a depreciation after June. But over the medium term, as I mentioned, as the balance of payment position improves, I think we'll start to see a gradual appreciation.
Ronak, great to have you on the program.